of trade war between the US and China has provoked a sharp sell-off on stock markets, hitting especially hard the stocks linked to cryptocurrencies. However, behind this decline lie deeper, structural problems for the largest corporate Bitcoin holders, such as MicroStrategy. New tariffs hit crypto stocks. On Friday, after Donald Trump's announcement of imposing 100% tariffs on Chinese goods, the S&P 500 fell by 2.7%, dragging the crypto sector along with it. Amid flight from risk, the stocks of leading cryptocurrency companies showed significant declines. For MicroStrategy, the largest corporate Bitcoin holder, the Friday stock drop of 4.84% became an occasion to discuss more serious fundamental problems. Analysts' attention shifted to the key metric, the market capitalization to net asset value ratio. This ratio for MITA fell below 1.180 to its lowest level in 19 months. According to Jeffrey Kendrick, head of digital asset research at Standard Chartered, maintaining a NAV above 1.0 is critically important for companies building Bitcoin treasuries. The decline in this metric signals weakening balance and increases pressure on stocks. The problem is exacerbated by the financing structure used by MicroStrategy and similar companies. They raised capital to buy Bitcoins through PIPE deals, private investments in public equity. As noted in the CryptoCoin report, the stocks of such companies are now trending toward discounted prices at which early investors entered. As a result, some of these investors have already faced losses of up to 55%. Currently, MicroStrategy's Bitcoin reserves are valued at approximately $78 billion, while the company's market capitalization stands at $94 billion. This $16 billion premium to the underlying asset's value raises more and more questions. Most analysts agree that this premium reflects not so much financial performance as investors' faith in its founder Michael Saylor and his efforts to promote Bitcoin-backed debt and investment products. However, in a market downturn, such a premium of faith can evaporate. Three altcoins on BNB Chain that could show impressive growth. BNB Chain is igniting one of the brightest altcoin rotations of the season. Talk of the network's supercycle keeps traders and investors on edge. While interest in meme coins on Solana fades, activity on BNB is growing rapidly. Traders are investing in a new wave of tokens showing signs of coordinated accumulation by large players. The memecoin season on BNB Chain is heating up. According to Nansen data, large wallets have accumulated from 240 million to 440 million BNB tokens in the last week, despite price corrections. Over the last month, the network has also shown increased activity. For example, CoinMarketCap reports that the number of holders of 4 BNB tokens increased from 8,000 to almost 24,000 in a month. This indicates a resurgence of interest from retail investors in BNB after the lull on Solana. Against this backdrop, 3 other BNB season tokens that are actively being accumulated are attracting investor attention. Among the growth leaders is Arc of Panda. AOP reserves on centralized exchanges have significantly decreased, indicating token withdrawals to private wallets. This often signals strong confidence and long-term accumulation. According to Cryptolaxy data, AOP leads among BNB tokens where trading volume exceeds market capitalization. This means that more money passes through AOP daily than the entire circulating supply of tokens is worth. This dynamic often precedes volatile price breakouts but also increases the risk of a drop if liquidity dries up. Next comes Bobholder, which reflects the network's liquidity growth. Over the last 2 weeks, its market capitalization has grown rapidly, and daily trading volume consistently exceeds $50 million. According to Nansen data, large BNB holders are actively accumulating tokens, and whale wallets hold more than a third of the total supply. This resembles the early accumulation stages we saw during the memecoin season on Solana in 2023. However, investors should be cautious. If large holders decide to take profits, it could lead to sharp declines. Popular trader and Cantalab's founder Ash Robin reported that he is monitoring profitable wallets on BNB. He claims that the real opportunity lies in mega runners, referring to tokens with a market capitalization of more than $20 million. There's a crazy opportunity on BNB right now. We haven't seen coins perform this well on Sol in months. I've noticed that all the top wallets are investing in mega runners, not coins with a capitalization of less than $100,000. It's similar to the early days of Sol, when large holders helped coins reach $100 million, Robin wrote on X. Robin acknowledges that the bean cycle may be temporary due to liquidity rotation but asserts that the data doesn't lie when volumes are high. If bean volumes slow down, I'll go back to Sol. I don't care which network I'm trading on, he added. The bean ecosystem has become the center of speculative trading in recent weeks, with many low-cap tokens surpassing the $20 million mark in record time. This bean season could bring short-term profits, but traders should be cautious. Rallies initiated by large holders can quickly turn into Massachusetts sell-offs.